Good evening, everyone. I will be brief because we've got a lot of, hey, Randy, very interesting speakers here tonight, obviously focused on robotics, which is hopefully why you're here. As everybody knows, very much an emerging field, a lot of activity in Massachusetts, a lot of activity in Central Mass, and so we've brought together an assembly of experts in their own right to give us a little bit of an education on it. So. Nick Pappas is going to be our first speaker tonight. Nick has served as the Vice President of Mass Ventures since joining there in 2009. He's been working at early stage companies for over 15 years as an investor and also as an investment banker. And he represents Mass Ventures in the community as a frequent speaker, panelist, judge, and mentor for various technology-focused organizations, so we're very pleased to have him here with us tonight. He sits on the board of Board on Track, Content Raven, and is a board observer at Energid, Jebbit, Metamagnetics, and Owner IQ. Previously, Nick was a senior technology investment banker from Oppenheimer, SVB Alliant, and Canaccord Genuity, both in Silicon Valley and just down the street in Boston. He's got an MBA from the Sloan School and is a graduate of the University of Richmond. So with that, welcome, Nick.
Well, it's great to be here. Mass Ventures, I'll give a quick commercial on us before I get going here, but Mass Ventures has been associated with the Venture Forum for quite some time. And it's great to be back out here. I would much rather commute to Worcester than to Boston every day, so I'm very happy to be in Worcester and not Boston. So I've been asked to do three things. One is to keep it brief. I will try to do that. Two is to give a little bit of an overview on the industry of robotics, which I think could take hours. So I'm going to attempt to do that in, 2 to 5 minutes, right, Rosemary? Okay. And then talk a little bit more about why investors like us at Mass Ventures like the robotics sector. And so let me get right into this. For those of you who don't know who I am or who Mass Ventures is, we are a quasi-public organization. So we're affiliated with the Commonwealth of Massachusetts. And it is simply, as I can say it, we are the Commonwealth's venture capital arm. We were established in 1978 as an economic development agency and affect that altruistic mission by investing in early stage technology companies that are based in Massachusetts. The mission has a lot of elements of filling capital gaps that are left by the private sector investors, the traditional venture funds and other folks, other sources of capital. And when we talk about capital gaps, we talk about a number of different gaps. Some can be geographic. I think those of you out in Central and Western Mass would agree that the flow of capital to this part of the Commonwealth isn't necessarily as free-flowing as it is to the eastern part of the Commonwealth. So we try to fill that need where we can. As well as first-time entrepreneurs. I'm sure many of you here are not only first-time but multi-time entrepreneurs, and sometimes you have a more difficult time raising capital from some of the more well-known venture firms. It's easier to raise money when you've done it before, basically is what that comes down to. And the third, and what is relevant here for tonight, is areas that might not be adequately addressed by the private venture capital firms and other sources of capital. And I think for various reasons that I'll talk to in a bit, robotics and manufacturing technology, I'll sort of group it all in one for this purpose, fits into that. There aren't a lot of investors that invest in robotics, and so I'll talk a little bit why I think that is. Some other facts and figures, I'm not going to go through that. You're not here to hear about Mass Ventures, you're here to hear more about robotics. So I think these are going to be available after the fact as well, Rosemary, so people can go through these. So in a short amount of time talking about robotics, what I thought I would do is spend a little bit of time just talking about perspectives of robotics and where folks might consider, the industry, if we look backward and where it is today, and where it might be going forward. And it's easiest to do that with pictures rather than charts and graphs talking about how big the industry is and the rate of growth and all those things. I think we're all pretty familiar with that probably. And so Phil mentioned that I was an investment banker for about 10 years or so. I've been trying to forget that, but thanks for reminding me. And I spent a good chunk of that time in the semiconductor manufacturing food chain. And this was in the late 90s and the early 2000s. And robotics were, I'll put it in quotes, everywhere in and around the semiconductor manufacturing food chain, whether it's automatic test equipment, material handling solutions, and all kinds of other things. But you rewind 5-10 years from that, and this is people's perspective of robotics. These huge arms and pieces of equipment that if you dare get near, it could end your life. And it was relegated really to automotive applications, heavy manufacturing, and pretty defined market space. I think if you fast forward not very far, but just to today, 10 years or so, maybe 5 maybe, the advances in the technology have done a lot to bring robotics and probably many of the things that those of you in the audience are working on to the forefront of our lives, and not just relegated to big industrial equipment. But I took the liberty of stealing some pictures off of Google Image, but things related to medical robotics, consumer and service robotics, certainly manufacturing as well, logistics, agricultural. But this is just in the last, some of these companies in the last 5 years, and some even less than that. But it's also nice for me at Mass Ventures to note that these are all Massachusetts companies. And so as a state, we have it covered sea, air, and land, which is fantastic. And there have been some key drivers in the technology that have pushed robotics into sort of mainstream, if you will, and many of those are related to advances in hardware, the price of the systems dropping dramatically, things related to software. Certainly I mentioned intelligence and awareness. So there's been a lot of trends in the last handful of years that have really pushed robotics into our daily lives. Even if you look at the picture of the Roomba there, the level of interaction that we have on a daily basis these days is frankly unbelievable, and it's going to be getting even more so. So it's an exciting space, one that we are committed to at Mass Ventures, and one that Massachusetts frankly dominates in. And so the question then is in my brief industry overview, is where are we headed next? And I put this next slide together sort of as a joke, but for those of you familiar with the Terminator, I figured I'd throw this up there, but it's not as much of a joke as I thought it would be. As I read the journal yesterday, Wall Street Journal, on page C3, there was a report from Merrill Lynch that's titled, "Warning, Robots Are Coming, the Apocalypse." And it is really related to all the advances in technology in terms of awareness and sensing and vision and all the technologies that are being developed, whether it's here or other great institutions across the U.S. in particular, but globally for sure, that are really driving robotics more into daily lives and to the point where we don't even realize the level of interaction that we have, whether it's on a call center, whether it's in a manufacturing environment, whether it's in the air. Many of us are consumers and are interested in either drones or other things that we enjoy as consumers. But that sort of consumerization of the robotics is really taking hold and pushing it more and more into the forefront. So with that very condensed view of robotics, I'd like to sort of talk something frankly more in my wheelhouse, which is, what do investors think about robotics? What do I think when I sit down with an automation company? And I think Rosemary asked me to talk about what we like about robotics, but I thought it'd be fair to share both points of view, because many of you are probably starting your businesses or have companies you're looking to raise money for. So what is it that people like me tend to like and not like about robotics? And I'll go down quickly here, certainly we can all think about large addressable markets, all of those pictures I showed. Many of those are billion-dollar markets unto themselves. The report that I referenced that was in the journal the other day, I think talked about a $155 billion market in 5 years, where 45% of all manufacturing tasks are going to be automated as opposed to 10% today. And that's just in manufacturing. So certainly huge addressable market opportunity, which investors like. It is hard to argue that robotics is not disruptive. So I think that we take that one for granted, for sure. Competitive barriers, certainly when investors look at your business, and in particular robotics, one of the things that we try to hang our hats on, and these next two are combined, is the level of intellectual property and how that sets you up for barriers to competition. And depending on the sector and the technology, these can be very favorable things, particularly in the robotics sector, for investors. And the last piece is, as a former investment banker and as an investor that likes to make money at the end of the day, the question that a lot of entrepreneurs forget to address during a pitch or a discussion with investors is, how are we going to get you out of the investment? How are you going to make money? And certainly, given the level or the opportunities for certain technologies to be acquired broadly, whether it's consumer, medical, manufacturing, there are a number of different buyer groups. Let's forget about going public these days as an exit option, although it exists, obviously. This is more focused on M&A, and particularly in robotics, there are a lot of clusters of companies, whether it's in software or hardware, that step up and buy robotics companies. We've seen Google, of course, famously buying, I don't know what the count is now, but my last count was 10 or 11 companies in the last 12 months or 18 months. And so when you open up the funnel for the types of buyers you could potentially have as a robotics company, investors like me would rather invest in a company that has multiple opportunities at exit than just say, it's Google or Yahoo and that's it, or pick your two companies. It certainly adds risk to the equation. On the concern side, any kind of hardware or any kind of technology that needs to get designed in or has, in many cases, a hardware component to it, typically has a very long sales cycle. That burns cash, that gets people nervous, that creates the risk of follow-on funding, and can the companies sustain the level of cash they need? Can they make enough progress with these long sales cycles? Unfortunately, a lot of investors have been spoiled by other software solutions that they typically invest in, mobile and others that have two things that go opposed to those concerns. One is capital requirements, and the other is the sales cycles. And many things in software take less time and less money to build and to get into market than say, a robotic arm or material handling systems or others. So that can be a red flag for some investors. I think some of the things that we've seen recently with the proliferation, of a lot of the hardware components is, where's the differentiation come from? We talked about some of the IP, but as things move to Asia, there's concerns around, can things get ripped off and commoditized pretty quickly, and then what are we left with as a company? What's the value that the company brings? And so that's, it's not a deal killer in every aspect, but it's certainly something to be aware of. And again, the nature of hardware, God forbid a company doesn't have a 90% gross margin and a 80% profit margin. And so that's a concern for some, not for us. And when you put these all together, it's interesting. My last slide here is, if you combine some of the things we do with grant money for SBIR companies and our equity investments, Mass Ventures, as a very small quasi-public organization and venture fund in Massachusetts, is definitely the largest robotics investor in Massachusetts, and quite possibly a lot I'd hesitate to say the US, but it wouldn't surprise me from a deal volume standpoint. Financial investor, I should be clear at that. And so, you know, the end result is it's unfortunate at times when hardware companies, particularly in robotics, have a hard time gaining investor interest because, you know, there are plenty of positive things. I think, I wouldn't say this perhaps outside this room, but many times investors have gotten lazy and it's easier to invest in software and other things than robotics. I think the tide is changing a little bit and hopefully continues to do so, particularly to the benefit of Massachusetts, given the technology is resident here. So with that, I will cut it off. Hopefully I didn't run over too much. So I'll be here for, I don't know if we're doing Q&A or any of that stuff after, so I'm happy to answer additional questions. Thank you.